Hey everyone, welcome back to Crypto Cash. Thank you for joining me here. Hope you're having a great day. Let's take a very quick look here at Bitcoin. Just kind of updating you on potential retracement areas of consideration for dollar cost averaging if the price were to continue to pull back. Generally speaking, when the price pulls back like it is here, kind of expected, then it's important to recognize areas you want to maybe consider getting into, either A, buy the dip on a spot bag, or potentially even consider a leverage play too. So we'll talk a little bit about that here as well. So if you're new to the channel, welcome aboard. Hope you can join me. Future reference, I do have a Trading Academy community and signals group, so link down below. Feel free to jump on over to our Discord. That's where a majority of our communication takes place. And future reference, I do have a course at Trading Academy and community as well. So let's talk a little bit about the big picture here with liquidation. There's a super big chunk of liquidation at 98 to 99,000 or 98 to 98.5. We talked about that yesterday. That's why I was expecting the price maybe to see one more candle wake up, but it kind of stopped out at about roughly 97.9. All that being said, though, there's a lot of liquidation just below the price action with late longs keep entering the market, and we can see that as low as about 91,000. So good news is that the heavy concentrations are further away, that we're less likely to see that, but we can't rule it out we got to consider that to be a possibility. Now, when it comes to the price action, we can see liquidation delta is still very high. So these are longs essentially holding their positions open. I'm not sure why exactly, but if you earn a long and you're in profit, you should have secured profits by now. But the key takeaway here is that we're tapering off from about 12 billion to about maybe 10 to 8 billion in liquidation delta. The reason why that's relevant is because as the liquidation delta continues to pull back, we get closer to that equilibrium, and essentially when that occurs, we typically either see a bounce or a shift in momentum. We're far away from that, and honestly, the selling pressure over the weekend is just typical profit taking from market makers. It's not people like you and I selling our bags, but the truth is, 95,000 is kind of that next area of support. So that's something I wanted to kind of emphasize and reiterate. That's also the local high. In other words, the previous high that hasn't been retested as a new low is that 95.3 mark. So we want to pay attention to that. And that's this yellow line here. This is basically when we were in that bullish rectangle pattern before we broke out to the upside. We can see here, we haven't retested that yet. So it's very common for the price action to come down to that level, either bounce or consolidate and continue lower. All right, so we're going to pay attention to that and see kind of if that will hold. You want to presume it'll hold at first, and then if it doesn't, we figure out an alternative. Okay, that's the general concept. But lately I've noticed in trading, the most important thing to kind of recognize is to trade either A, ranges, or B, more importantly, support and resistance, and it's a lot more beneficial to utilize. Okay, now a lot of folks will just solely use fib levels, and that's fine. But if fib levels don't have confluence, then they don't really mean a lot. Now the good news is right here we can see some heavy confluence here at this area here. So let's talk about that. First of all, when we take a look here, we can see with our point of control here locally, first of all, just kind of preface here, 94,600 is that lower area of support. So that's right there at 0.618 fib. This is a perfect place here to consider dollar cost averaging or buy that dip if we come down that low, because we got a lot of volume support in the local range. We also got a 0.618 fib level. So if the price were to pull back, that's a common area of retracement. Okay. Secondary to that would be 95,300. So these are the two areas I'm interested in getting in if the price were to continue lower. Okay. So those are two good areas of consideration. Now, when we look at the macro here, generally speaking, this is all positive. There's nothing super bearish here. We're just seeing this natural cooling off here once we, because we're overextended, and the price has to pull back at least a little bit before it legs up again. Okay, so this is just kind of natural capitulation. We've been expecting this majority of the week too, so it's nothing super crazy. All that being said, let's take a look here at the 4-hour and recognize we're still above all the trends here. We're maintaining above the 20-day SMA for the moment. I think if we break below that, which is very likely, we're going to continue down to this lower range here, and we can see that 50-day SMA hanging out here. So that 95,300 is looking like a pretty juicy target for consideration on a long. Okay, so it's kind of reaffirmed in multiple ways. Other than that, really the 4-hour time frame is just going to kind of confirm that we are diverging at this point. Of course, we've shifted momentum. Money flow index is higher than the RSI, which is generally favorable, but the overall sentiment is we've broken below our moving average. Stochastic swinging down and MACD diverge. So those are all signs letting us know further continuation lower is higher, a higher likelihood. So at this point, I'm going to consider either along at the 95,300 mark or 94,700. Those are two areas of consideration for the moment. That can definitely change between now and then. So what I do is I typically reevaluate when we get there. So I'm going to set an alert at 95,300 and under the impression I'm awake and alert, then I'll go ahead and reevaluate, see if it's worth taking along at that point. You want to kind of, what we're looking for is for volume to start increasing at that level. If volume stays low and we continue to taper off, there's no buying pressure, and there's no point in buying. It's just going to keep going lower. But between now and then, you be patient. You don't just blindly set a limit order for 100x leverage long at that level. You reevaluate later and consider maybe DCA targets on the way down if that's your thing. Okay. All right, folks. I'll post our playout chart in our Twitter, Telegram, and Discord. If you're not familiar, it looks a little something like this, where I post every single analysis that I create, and I have multiple ones throughout the day. And then, of course, last thing too here is this Bitunix. These guys are phenomenal. Make sure you reference them. Link down below for that. The page is not loading for some reason, but there is a benefit right now that we have with them. It's a nice deposit reward bonus for the month, and we can kind of see here. It's probably because I am logged in. There we go. We got 2,000 net deposit, $400 deposit bonus for that. So check it out. It's easy money. And this is mainly just an update for my community members because it expires on the 14th of May. So just take advantage of that. It's nice to be able to have some extra futures bonus. All right, folks. Hope you have a good rest of your day. Look forward to seeing the next one. Take care out there.